All right, let's begin. So again, good afternoon, everyone. Thank you for joining us for our Sign Association of Canada's webinar, Navigating Government Assistance Programs, presented today by Lawrence Lewin of Ernst & Young. So my name is Corinne Eaton, and I'm the Executive Director of the Sign Association of Canada. The objective of our webinar series is to provide timely information. And with regard to this specific webinar, we know that right now it is very challenging to keep up with the announcements and navigate the various government programs available for businesses. And so that is why we have this session here today for you. Before we begin, I will take just a few minutes to review some of our member tools and resources that we have for members to ensure that you are aware of all the latest initiatives that the association has. And after that, I will introduce our speaker, Lawrence Lewin. The question and answer portion of the session will take place after the session, and you can then just type in your questions through the chat window, and my fabulous colleague Hilary Prue will read them out to Lawrence. And lastly, this presentation is being recorded and will be available to all attendees after the session, and as well as any members after the fact who want to listen in. So as a member, you are part of a multidimensional association. So you are a member of your local chapter and region, the Sign Association of Canada, and if you're a Class 1 member, so you're a sign manufacturer, you're also part of the International Sign Association. As we find ourselves in these extraordinary times with no real blueprints to follow, both for businesses and for employees, the Sign Association has been working hard to provide useful information to our members. So here are a few tools and resources I wanted to bring to your attention. So this is the ISA Business Resources page. If you haven't checked it out, do so. So it's you can see the URL signs.org/BCRC. And they are adding information there on a daily basis. So impacts for businesses, health and safety, just information to keep you informed. And right now, as we are starting to slowly, hopefully, open up some businesses, and it really depends on where you are. Well, I mean, there it's US, but also even provincially, they will be adding some tips on what that opening up means. All right, next slide. The Sign Association of Canada also has a COVID-19 resource page, so you can find it right under resources, and you will find here a lot of the latest resources updated, which we try to update on a daily basis, and this information is from Government of Canada, BDC, Chambers of Commerce links, and there are also links to each province as well to ensure that, you know, where you are and which province you live, you get those latest resources through there as well. Next slide. And so, as most of you are currently at home, and it really depends what you're doing, but it could be also a good time for professional development, and ISA has developed a library of over 70 e-learning courses pertaining to the sign industry. So topics range from marketing, sign design, intro to vehicle wrapping, to print and project management. So this can be used both by people who are new to the industry as well as industry veterans who are looking to update their knowledge. These e-learning sessions are they are at a cost, but a very low cost to members, and so we highly recommend looking at them, especially if you haven't, and even if you have in the past. There are new sessions there. They add them a couple of sessions at least quarterly. All right, next slide. We also want to remind you that we are social, and so that means that you need to make sure you connect with us either through ISA, the Sign Association of Canada, the Ontario Sign Association, the Alberta Sign Association, IKEA, and then there is also the YPN, the Young Professionals Network. They are also social, both on Instagram and SAC, and all the other platforms are on Twitter and Facebook and LinkedIn, because sometimes the fastest way for us to share that information is through these social platforms. So please do connect with us. Okay, and then the next thing is also newsletter. Make sure you're subscribed to our newsletters due to the daily updates. For example, ISA sends out a daily digest to all of its members. And the Sign Association of Canada has also increased its newsletter frequency from monthly to bi-weekly to ensure that our members are kept informed. So if you're not receiving our newsletter, please get in touch with Tina Kendrick, and she can be reached at sacmembership@signs.org. All right, so now I'm going to introduce our speaker briefly. Lawrence Lewin, he's the Executive Director of Compensation Tax Ernst & Young Law at Ernst & Young. He's skilled in design of deferred compensation arrangements for both executives and broad-based employee groups. He has significant experience in tax dispute resolution with a focus on employee benefit issues. He has a law degree from the University of Western Ontario Law School. He's very involved in business issues related to COVID-19 right now, and that's why we invited him to speak today to you about navigating the government assistance programs. Thanks very much, Lawrence. Off to you.
Thanks a lot, Corinne. I always get nervous when people start reading my bio. I'm thinking like, well, is that me? Anyway, I have to confess that I actually didn't know much about the Sign Association up until very recently, but it sounds like you guys do a lot of really interesting things. So what I was planning to talk to about today was essentially the COVID-19 situation and a number of the government programs that have been put in place to deal with this unprecedented issue. I mean, really, what it is it's an event which you know, I've certainly not seen in my lifetime, and I don't know if anyone has. The economy, as you probably well know, has been, you know, largely shut down in many areas, and as a result, this has been very difficult for individuals and businesses. So for example, some businesses, probably including your own, have seen revenues you know, shrink more or less overnight, and in many cases the businesses have been shut down altogether. So this obviously poses very great difficulties for businesses who have to cope with this big reduction in revenue. Questions such as, you know, how are they going to make ends meet, what to do with employees, do you lay off employees, is there other ways to save money, and so on. So what I was planning to talk to about, and I have the agenda set out over here. Essentially what I want to do was talk about some of the measures that the government put in place in response to the COVID-19 pandemic. So really what happens is, you know, the World Health Organization declared a pandemic, I think it was around March 13, and then things seemed to start happening pretty soon afterwards. It's weird to think that it's like only 6 weeks. It seems like a lifetime to me, at least. So really, you know, what I'll talk about, go over briefly, what are some of the extensions to the tax deadlines and various tax remittances, because one of the major issues, as I'm sure you are probably grappling with, is sort of, you know, how to manage working capital. So think about what types of payments can be deferred, particularly if there's no interest, and sort of try and push out those payments as long as possible, and so on. So that's where the deferral of various types of payments is relevant. I'm just going to touch on some of the provincial tax deferrals, particularly around WSIB and employer health tax. You know, essentially, there's a deferral for most of these programs until the end of the summer, but there are various differences by province. I'm then going to spend some time on the two wage subsidy programs that were introduced, which are probably of interest to many. So the first is what I refer to as the 10% wage subsidy. So this was the first wage subsidy program that was introduced. It applies mostly to small companies. So for example, if it's a corporation, the corporation's got to qualify for a small business deduction. And basically what it was is, you know, as the name suggested, subsidy equal 10% of remuneration paid to employees. Then the next item is something which is getting a great deal of attention, and something that I've been spending a lot of time on. This is a 75% federal wage subsidy, often referred to as by the acronym of SUS. So this has been getting a lot of attention. So what I'm going to do is just talk about at high level what are some of the eligibility requirements. So how do you determine eligibility? How much is the amount of the subsidy, and a couple of points in terms of how do you apply and so on. Then in addition to those programs, they have the existing programs. So for example, there's the EI work sharing program, which may be of interest to some. This is sort of a program which existed before, but has now sort of been resurrected in light of COVID-19. So I'll talk about that. Sort of that program for companies that qualify for the 75% wage subsidy EI work sharing program is probably not all that relevant, but I'll mention it in case it is relevant to some, or if you don't qualify for the wage subsidy program. I then will just shift gears and speak briefly about some of the programs that the government has put in place to try and help businesses with liquidity concerns during this time. So one is the Canada Emergency Bank Account. So that's the loans of $40,000, with the forgiveness provisions and so on, provided that payment is made within a specified period of time. I'll just go over some of the eligibility requirements. Some of you may have already applied for that, and then I'll talk about some other loans programs, and then also changes to the Summer Jobs program. So the Summer Jobs program may be of relevance to some of you. Is essentially, in a sense, you could hire students, and the government could basically pick up the tab. So that may be of interest. So that is the agenda for today. And really, I'm not going to give I'm not going to go into a great deal of detail on any of these programs. I mean, for example, I have a presentation on the 75% wage subsidy program, which can go for an hour and a half, going into a number of the technical issues and so on. And I appreciate that, the people on the line, you probably have lives and you're not a tax nerd like me, so you're probably not that interested in the nuances of the language. So what I'm going to do is try and keep it high level. And also, just to sort of, before we get started, one thing to keep in mind is that whatever I'm saying, this is high level information only, and it should not be construed as tax or legal advice. And what I'm saying also, if I'm taking a position on anything, it reflects my view and does not necessarily reflect the views of Ernst & Young. Okay, so with those housekeeping matters aside, let's dive into it. Okay, so the first thing is sort of changes to deadlines for tax returns and remittances of certain amounts. So the first thing to note, and you're probably aware of this, is that typically the deadline for individuals tax filings is April 30th. That deadline is now being moved to the end of May. So there's an extra month. So if you file your tax return as an individual, you can take a bit of a sigh of relief that there's a deferral for a month. Now, individuals who are self-employed and their spouses, so this is important, that deadline is June 15th, and there's no change to that. So if you operate as a sole proprietor, for example, your deadline is still June 15th, and there have not been no changes. So corporations, now if a corporation, the tax return was due after March 18th, but before June the 1st, now the deadline has been moved to June the 1st. Otherwise, there are no changes. So as you probably well know, the deadline for filing a corporate return is generally 6 months after the end of the fiscal year. Some other things which are relevant is sort of there's a deferral of tax payments, so for installments and payments like that. So any installments which were due on or after March 18th have now been deferred until September 1st. So the idea then is, hopefully we're hoping that the situation will be over by September 1st, and that's in order to recognize the fact that it may be hard for individuals or businesses to come up with these funds to make the tax installments because the business is not operating. Important thing to note, right? And we'll sort of get into this in more detail. Aside from that 10% wage subsidy that I'm going to talk about, there is no change. There's no deferral or change to the rules regarding payroll source deductions or withholding taxes. So if you're paying an employee, you still have to withhold tax and calculate it in the normal way, like irrespective of the source of that money, and remit the funds in accordance with the normal deadlines. And as you probably well know, that there are penalties and interest if you don't do that, and potentially directors could be liable as well, right? So if you are paying an employee, you do need to withhold the tax, and that's that 10% wage subsidy applies, and you need to be sure that it's remitted in time. Okay, so just a quick word on GST and HST. So there's a deferral, so amounts that were due on or after March 27th until June 1st are now due on June 30th, and so there's a small deferral over there, but otherwise not really big changes. Okay, so something which I think may be of interest to many of you. So as you, and one thing I should have actually asked Karim and Hillary for before was sort of what provinces are the majority of members, based in, right? Because provincially there are various payments which are required. So for example, number of provinces have an employer health tax, and then the workers' compensation payments. So dealing with employer health tax first, and I had listed 4 provinces there. If you are based in other provinces, I just suggest that you look up the deadlines as well, because I'd only checked on 4 provinces. So employer health tax, so BC, Ontario, and Quebec all have this. And in Ontario, for example, it's the province I'm most familiar with, a couple of changes. First is the EHT exemption has been increased from $490,000 to $1 million. But note that this exemption only applies for companies with remuneration under $5 million. So total remuneration has to be less than $5 million. And if it's more than $5 million, then you get no exemption, right? So if, for example, you have total Ontario remuneration of less than $5 million, your exemption now goes up to $1 million. So you don't pay EHT if you have remuneration under $1 million. The other thing which is significant is that the deadline for EHT remittances, typically it's due every month, but for payments due after March 18th, that deadline is now being deferred until the payments have to be made before September 1st, right? So there's a bit of a deferral over there. And just in terms of, the reason I mention these deferrals is that I appreciate that most businesses are grappling with liquidity issues and so on, right? So it's important, to track these deferral dates, because, all things being equal, if there's a deferral and doesn't cost, there's no interest or penalty associated with doing so. And for example, you have bank loans out there where there is an interest rate, it makes sense to take advantage of these deferrals. But keep in mind, it's a deferral, it's not a forgiveness, right? So the amount will still be due. So provision needs to be made for paying that when it becomes due. But to the extent you can take an advantage of the deferral, it's a good idea to try and do so. So BC, no change with the exemption, but the deadline is September 30th. Quebec is September 1st. So for WSIB, and I think a lot of those on the call probably deal with WSIB, there are also some extensions to the period. So Ontario, for example, there's a deferral until August 31st, as in Quebec, and BC, the deferrals to June 30th. Cool. All right, so now I want to sort of get into, what I often regard as sort of the heart of the subject matter. And this is the wage subsidy. And just stepping back for a second, just to put it in context, the reason this wage subsidy discussion is relevant is when faced with, liquidity issues, loss of revenues, and so on, businesses are naturally looking to see, well, what are their biggest expenses? And for a lot of businesses, labor costs are the number 1 or number 2 expense, right? So the question then becomes, well, what do we do with a labor force, right? I mean, so the way I think about it is sort of a continuum. So one end of the continuum is sort of the status quo, that you continue to pay your workers as you had been pre-crisis, and the other end of the continuum is layoffs. Where it gets interesting is sort of like things in the middle. So if you can think of things in the middle, alternatives could be, for example, reductions in salary. It could be work sharing. So instead of an employee working 5 days a week, maybe they work 3 days a week. There's you know, sort of a layoff, like, and employer top up, for example. But the things that I want to focus on was I realize a lot of businesses maybe can't afford to, you know, keep the status quo. They are looking at reductions and so on. It's sort of, well, what is the impact of these government programs? So for example, if you get the wage subsidy, like how does that work out, right? Like how much can you get in a wage subsidy, and could that help you keep employees employed? And as you probably well know, there are a lot of advantages for trying to keep employees employed if possible, right? So we're hoping that sooner or later this situation is going to end, hopefully sooner rather than later. And you know, of course, if the employees are kept in payroll, not laid off, it's a lot easier to ramp up operations, respond to increases in demand, and so on. And also, it's important from like an employee perspective. So to the extent that it's difficult to attract and retain and train qualified employees, a lot of businesses don't want to let good employees go. So I just know, like from my own perspective, like you know, it's really tough to find good people. And then in my business, I find it takes, you know, well over a year to train someone to the point where they're competent. So you know, when you have good employees, naturally you want to do whatever you can to hold on to them, and this is where these wage subsidies can be relevant. Okay, so the two main types of wage subsidies. So the first is this, what's referred to as a temporary wage subsidy. That was the name, but this is really a 10% wage subsidy. And you know, in terms of the period, this applies for a 3-month period, starting March 18th, and it ends June 20th. And what it is, and we'll get into sort of who it applies to, but if a business applies for this, qualifies for it, basically the subsidy is equal to 10% of remuneration paid to the employee. So for example, if you're paying an employee, let's make up a number, like $100, you know, $100 every 2 weeks. So then this wage subsidy would be equal to 10% of that, so it's $100. And the way it works is essentially you withhold, you know, you calculate the tax withholdings as you normally would do, but instead of, for example, remitting $400 to the CRA respective, this employee would only remit $300. So you would reduce it by the amount of the subsidy, which in my example is $100. Now, there's some limits in terms of the quantum of the subsidy. So the subsidy is capped at $1,375 per employee, and the aggregate maximum per employee is $25,000. So it's not a huge amount of money, but better than nothing. Just a word in terms of the types of businesses that qualify. So essentially, it's got to be you know, a sole proprietorship. It could be a partnership or corporation. Now, in the case of a corporation, the corporation is going to be a Canadian-controlled private corporation that qualifies for the small business deduction. So you know, the business is represented by the association. A number of you may qualify for the small business deduction, but in the economy in general, there are a lot of Canadian-controlled private corporations that you know, the requirements around qualifying for the small business deduction are fairly restricted. I mean, one being that the taxable capital is limited to $15 million. So for that reason, a lot of Canadian businesses didn't qualify. And when this was announced, there was you know, some outrage, and a number of businesses said, well, this doesn't really address their needs. Firstly, it's too little, and the category of companies that are brought in are very small. So in response, so the government went away and then came up with this other wage subsidy, which is referred to as the Canada Emergency Wage Subsidy, or the CEWS. So let me go into this one, because this is probably a wage subsidy which is of interest to many. So sort of before we leave that 10% wage subsidy, that a 10% wage subsidy could be relevant as well for you. And what I'll get into in the end is, let's say the 10% wage subsidy is relevant and the 75% wage subsidy. Basically, the way it works is you know, when you actually apply for the 75% wage subsidy, you have to say how much you were entitled to under the 10% wage subsidy, and there's sort of an offset. So you can't. So the two programs are, you know, are not cumulative. They're sort of, you know, if you're getting the 75% wage subsidy, it's reduced to the extent that the business is eligible for the 10% wage subsidy. Okay. So what is the 75% wage subsidy? So firstly, just in terms of the eligibility period, so the eligibility period started on March 15th and ends on June 6th. So it deals with remuneration, which is essentially owned by employees during this period. Right? So then the question is sort of, well, how much can this wage subsidy be? And basically, the amount of the wage subsidy is 75% of the amount of remuneration paid to the employee during the weeks which start March 15th to June 6th, up to a maximum of $847 a week. Now, there are various calculations which have to be done, and the CRA actually has an online calculator that you can work through and help figure out the amounts. But basically, this subsidy can actually cover 100% of what you pay to employees during this period, provided that what you pay them, provided that, I guess, a couple of things. First is that the employee was employed before March 15th. Second is that what you, the amount of subsidy that you're claiming is not more than 75% of the baseline remuneration. Baseline remuneration is basically what the average weekly pay for the period from January 1st to March 15th, right? And then there's the dollar limit of $847. So in theory, like if you reduced employee pay, you could, and let's say, for example, you had an employee making $60,000 before this whole thing started, right? And that was the average pay for, you know, for the period from January 1st to March 15th. You could basically pay them 75% of that amount, right? And up to maximum, you could pay them basically $847 a week, right? And that could be fully covered by the government, right? And then there's some other important things as well. So there's a distinction around whether, let's say, for example, you bring back an employee. So part of the rationale for this program was A, to prevent further layoffs, and B, in the situations where businesses already laid off employees, to try and bring them back and put them on payroll. So you can think about, for example, the airlines, right? So the airlines did major layoffs pretty early on when flights were reduced and so on. So the airlines brought back a number of employees. So in the situation where you're bringing back an employee and the employee's not actually doing any work, they're basically sitting at home. In that case, the subsidy is increased by the amount of the employer's CBP or EI, or the Quebec equivalent. And essentially the rationale for this was to make the employer neutral between bringing back employees and leaving employees laid off. So that the government wanted to remove all these incremental costs associated with hiring employees back. But so then you're probably thinking, well, what about EHT and various provincial taxes? So it's true, there is a cost over there, but that cost is deferred until, let's say, August 31st, right? So that's a deferral. But EHT is only 1.95%, and as we discussed before, you know, if your total interior remuneration is less than $1 million, you may be exempt. Okay, so let's maybe just shift gears and talk about, well, what organizations are eligible for this 75% wage subsidy. So this legislation, and just a word on the legislation. So the legislation was enacted on, I think it was April 11th. Basically, the Department of Finance prepared this legislation in a week, which is like really fast for the government to do anything. So they prepared and was voted and everything. So there are a lot of problems with this legislation, but the government got it out really quickly. So, you know, hats off to them for that. So when it comes to the legislation, so they talk about, you know, who's eligible, right? So the term they use is an eligible entity. So the question is, well, who's an eligible entity? So an eligible entity is defined really broadly. So it's, you know, companies large and small, includes most partnerships. There's some special rules around partnerships, but most regular type of partnerships include sole proprietorships. There's an exception for entities like hospitals and schools and so on, but I don't think any of those types of entities are represented by the sign association, right? So corporations large and small. And one thing to keep in mind is, unlike that 10% wage subsidy, with the 75% wage subsidy, there's no limit per entity, right? So remember, with a 10% wage subsidy, it was capped at 25% total per employer. There is no dollar cap over here, right? It's, the maximum is $847 per week per employee, or 75% of the baseline, but there is no dollar cap, right? So that's of interest to many. The special rules, in situations where employees are not at arm's length. So if there is a situation like that, I mean, I would encourage you to consult. Essentially, if a non-arm's length employee is hired after March 15th, then you don't get the wage subsidy in respect of those employees. Okay. Now, in terms of the criteria, so let's say you're an eligible entity, how do you get into this program? So this is the big point. So if you're an eligible entity, in order to get in, you have to have a reduction in revenue, right? And by certain prescribed amounts. So the amount is, it's going to be a reduction in revenue for March of 2020 of at least 15%, and for April and May, it's at least 30%. So the question, well, how is this reduction in revenue calculated? So basically, the way it's calculated is, you look at your revenue for March of 2020 and you compare it to revenue of March of 2019, and if it's down by more than 15%, then you qualify. And one significant thing is, so if you qualify for March, then you deem to qualify for the next period, so like the April period as well, right? Now, what if you weren't in business in March of 2019? So there's a special rule which says that you could either use the month in the previous year, or you can use the average of January and February of 2020. So for example, the alternative method would be to look at revenue in, let's say, March of 2020, and you compare it against the average revenue of January and February of 2020. If you're down by more than 15%, that's a different way you can get in. Now, keep in mind, if you use that second method, so like the average of January and February, you have to stick with that method for the next period. So like, if you're doing the evaluation again in April and May, it's all the same, right? Okay. And generally, revenue, the special rules, which I don't really have time to get into in terms of computation of revenue, but basically a couple of things to highlight. One is, the starting point is that the business should use their normal accounting methods. The second rule is sort of you exclude non-arm's length revenue. So sort of revenues you're getting from related parties are generally excluded. Now, the special rules, if, let's say, for example, your entity derives more than 90% of its revenue from non-arm's length sources, there's special calculations which you can do, which basically have the effect of trying to figure out amongst all those non-arm's length entities, how much has their, the revenues that they're earning from arm's length entities, how much of those drop. So that's basically what it comes down to. And so if you operate outside Canada, this is important. You're only looking at your revenue from activities carried on in Canada. So this is an important point, right? So it's revenues from activities carried on in Canada. And then there's a couple elections you can make. So one election is you can elect to use either a cash or accrual accounting method. So for some, cash may be better. So think, for example, situations where the accounts receivables that are not being collected, you've had to do deferrals because your buyers, your customers can't pay. So in those situations, maybe a cash method, gives you a better result if you're not hitting the 15 or 30% as required. And then last, there's another election that can be made, and this election is, so when you're computing revenue, it can either be done on a separately on an entity by entity basis, or companies within a related group can consolidate, right? A couple sort of housekeeping matters on this is, so one is, in order for a company to be eligible for this, they have to have been registered with a CRA and had a payroll account on March 15th, right? So if you didn't have a payroll account on March 15th, you can't get the wage subsidy. So that's an important point. So just getting to the next slide. So the next slide sort of sets out like so what are the periods, right? So basically, this the subsidy works in terms of looking at a number of periods. So the first period is March 15th to April 11th, and so on. And it sets out, well, what is the revenue required to get into that, to qualify for that period. So essentially, like if you, let's say, for example, your revenue was down in March versus March of 2019, then you would qualify for March 15th to April 11th. So any basically employment income that you pay to employees during that period, the March 15th to April 11th period, could qualify for the subsidy, subject to the caps and so on, right? And what you have to do is basically the process is if you have a CRA My Business account, you use that to go into the CRA set up a special online portal for this. And one easy way to do it is you could just type into Google CRA and CEWS, and I think will take you to a description of the program, how to apply, and so on. But basically, the person has responsibility for the financial affairs for the company. So, for example, like CFO or treasurer or director of finance or so on, is required to attest to certain things, right? So one thing that they have to attest to is that there's been a drop in revenue, and that the amount that they've calculated for the subsidy is correct, and so on. A bunch of things. And just keep in mind that I don't mean to create a lot of anxiety and so on, but there's some pretty serious penalties associated with this program. So, like if you screw around with revenue, for example, there's a penalty of 25% of the amount of wage subsidy claimed, and plus the wage subsidy would have to be paid back. There's another penalty of 50% for gross negligence, and then also like some potential criminal offenses as well. So for example, if there's an entity which knowingly makes false statements or essentially committing some sort of fraud to try and get these subsidies when they're not entitled to do so, there's potential for jail time of actually up to 5 years. So this is really serious from a tax statute point of view. Like, for example, in the Income Tax Act, the maximum you can get is 2 years, and it's very, very unusual in Canada for people to get sent to jail for tax. The US and some European countries send people to jail all the time, but in Canada, you just don't see it. But because this is such a big expenditure on the part of the government, there's a lot of anxiety. Like, the government's worried that there may be some people who would abuse this program, and so for that reason, they've there's some pretty serious offenses. So what I will say is, if you plan to use this program, and I think probably for a lot of businesses, the good reasons why you would want to do so, you just want to be sure that everything is properly documented and that you have a good file. Because from our discussions with the CRA, we understand that they've actually assigned 3,000 auditors to this fund program, 3,000 auditors. And there's going to be a very high level of audit activity. So you just want to be sure that, for example, if your revenues are clearly, like your business has stopped operating, okay, that's fine. But if your revenues are close to 15 or 30%, you want to be sort of sure over there. You also want to be pretty sure in the amounts that you claim for the wage subsidy, because if the numbers are larger than what you should have claimed, then there's potential for penalties is very real. And also keep in mind that if the amount that you claim is too little, right, you can't actually go back off the fact and change it, right? So for that reason, you want to be pretty sure before you claim. So in terms of process, so the CRA opened up this portal on Monday, and we understand that they've already been flooded. So you can already apply, but keep in mind that you have until September 30th to apply. So while a lot of businesses are already rushing to get the money now, and understandably so, if you're not sure, or if you need extra time to go through your documents and so on, I really think it's prudent to do so, especially given the penalties which may be involved. Okay, so I think I've gone a bit long over here, so I'm just gonna maybe go quickly over some of the rest. So a couple of other things I just wanted to highlight, and I just want to leave some time for questions, so I will go quickly. is there's the SERB benefit. So this is the benefit which, one of the first benefits to roll out. This was a $500 a week, which applied to both employees and self-employed people. And essentially, let's say, for example, as an employee, if an employee lost their job after March 15th, all EI applications were now being channeled to SERB. So if someone applied through EI, which I think is the correct thing to do in the case of an employee, that would automatically be channeled to SERB. Okay, so I'm not going to go into this in much detail because I think the CRA website is actually pretty good on this point, and it's not particularly technical. One thing I actually just wanted to highlight, which may be of interest to some of you on the line, is sort of the whole question around, let's say, for example, you've laid off employees, right? Like, what's better for the employees? Is it better for them to stay on the SERB benefit, or should you look at hiring them back, even if they're not doing any work, right? Hiring them back and claiming the wage subsidy. This is an interesting question, and the answer is different depending on the employee you're looking at and how much they're making and so on, right? General rules, I mean, and we have detailed, we have sophisticated tools to run, scenarios on a very granular level, but the general rules are this: if you have an employee who's making a lower income employee, so like an employee making under roughly, I think it's around $40,000, generally on an after-tax basis, the SERB benefit, the $2,000 a month, is better for them. But if you have an employee who's making more than $40,000, generally speaking, it's better to bring them back, and even if you just pay them the $847 a month, right? Assuming that it's possible given their income level, that's generally better for the employee on an after-tax basis. Now, keep in mind from the perspective of the employer, right? There is, aside from EI, there isn't really additional cost associated with bringing employees back. So that's something you may want to consider doing. Or you may want to think about, running the numbers in all cases. You should also keep in mind that if you do decide to bring employees back, the question is, whether you can get the wage subsidy, and so there's a lot of rules around interaction between the wage subsidy and the SERB benefit, which is the $2,000. The CURB benefit, the $2,000 a month benefit. Basically, what you want to do is you want to bring them back during the first 14 days of the period. So, for example, let's say the period which began on April 12th, you want to bring them back. You want to hire them back either before April 26th, for example. And it is possible to do retroactive hirings, because the problem is if you hire them back on, let's say, the 28th, then there are like rules which say, well, this employee would qualify for the SERB benefit, which means that wage subsidy doesn't apply. So what I will say is, if you're looking at hiring back employees, this is something you want to get advice on to be sure that you maximize your ability to get the wage subsidy. So I mean, that's an important point. Okay. And also just on this, if you do hire back employees retroactively, a lot of these employees probably applied for the SERB, and it's going to mean that they're going to have to repay the SERB benefit, because basically they retroactively didn't apply for something which they applied for. So it's probably good practice that if you're hiring them back and they're not going to qualify anymore, is to sort of say to them, you're planning to hire them back, but keep in mind that they probably have to repay this benefit, right? Now, strictly speaking, that's an issue between them and the CRA, but it's still good practice to point that out to them. Okay, so I'm running very out of time. One thing I'll just mention, and then I'll leave some time for questions, is sort of this Canada Emergency Business Account. So this is the interest-free loan of up to $4,000 for small businesses to cover operating costs when the revenues have been reduced. One significant thing here is that there's, if there's repayment, and so everything has to be repaid by December 31st, 2020, then 25% is forgiven, so up to $10,000. So this is a pretty good deal, right? I mean, it's access to funds on an interest-free basis, and then potential forgiveness. So this is something which, if you qualify, it's quite beneficial. Keep in mind, though, that the funds which you borrow have to be used for expenses that can't be deferred. So like stuff like rent and, wages and things like that. In order to qualify, the business had to have payroll in 2019 between 20,000 and 1.5 million. So it's not relatively small businesses. And you had to have a business account with a financial institution as of March 1st, 2020. So I think a lot of businesses probably would have some sort of loan facility with a commercial bank. So I think that's probably not a big not a big impediment. But basically, the way you apply it for this is through your bank, right? So you would go to your bank. Most of the major banks have got they're quite aware of this program. So the way you would go about this is by contacting your bank. So I have a lot of other stuff, but I think what I've covered are some of the main programs. Maybe one other thing I just want to touch on briefly is sort of the summer jobs program. So I just wanted to put it out there that to the extent that your business could benefit from some additional help, it is possible to hire students for over the summer and basically get a subsidy equal to the minimum wage. So essentially, you could hire these people, and as long as you don't pay them more than minimum wage, the wage would be fully covered by the federal government. So that could be it could be quite advantageous to you. So I think I'll leave it there and open up the line for questions, and I'll do my best to answer any questions that there are. Just before we get into questions, I'll just note that for a lot of these programs, there isn't, we have some information, but there's not a great deal of detail. So we still, there isn't full certainty on everything. So just keep that in mind.
Thank you so much, Lawrence. We do have a question. Jeff Taylor would like to know, for the CEWS, is there a way for owner-manager remuneration that is calculated and paid once a year to be covered?
So that's a good question. And actually, we looked at this. I think the short answer is no, because it has to, the remuneration is going to be eligible remuneration and would have to be paid during the period of starting March 15th and ending June 6th, right? And, you also have to, other thing which is relevant is the concept of baseline remuneration. So there has to be average weekly pay between January 1st and March 15th, right? So if you only pay once a year, you're probably not going to have an amount. Well, I mean, depending on the timing of payment, you may not have an amount for baseline remuneration either. So I think the answer to that is most likely no.
All right, thank you, Lawrence. I think, with respect to summer programs, what is the earliest date we can hire students?
Now that is a good question, and I must say I don't actually know. Yeah, so I'm more up on the tax measure, so I don't actually know that. But what I would suggest doing is if you maybe just Google COVID-19 Canada summer jobs, I think it will probably probably explain it there.
All right, that's fair. I received another question in regards to the CEBA. The payroll restriction, is it fiscal year or calendar year 2019?
Sorry, sorry, CEBA. Let me see if I talked about this. Oh, sorry. So I thought it was fiscal. One second. Yeah, so I thought it was fiscal. So 2019 fiscal.
Okay, and we also have the question, where can I find the best support for not-for-profit organizations?
So the best support in terms of, these programs. So like for example, some not-for-profits have been an area of focus, and if you look at the particular program that you're thinking about, C-rated finance does have commentary as it applies to not-for-profit. So, for example, for the 75% wage subsidy, there is some discussion of not-for-profits, and particularly around revenue and how to account for revenue for not-for-profits. I'm not close enough to the not-for-profit sector to know, but I would think that there probably are organizations, particularly focused on not-for-profits, which may have more targeted resources. But I know that there are some specific provisions in each of these items which deal with not-for-profits. So I think maybe if you're not a member of one of those organizations, to look first at the CRA website, and they do detail a number of items which are relevant for not-for-profits. The other thing I wanted to just keep in mind, and there was an attachment sent out, is that the BDC has a very good website where they describe a number of these programs, and they also include links, for example, where to get more information, how to apply, and so on. So their website is www.bdc.ca, and I encourage you to look at that, because it's not technical information, but it deals with a lot of the pragmatics. So in terms of big picture, like what are the criteria to qualify, where do you apply, who applies, stuff like that.
Thank you. There's, I just see another question. For the CEBA, do you think the government will change the payroll limitation to include dividends like they have on some of the other programs?
I don't know. When you think about a lot of these programs, that it appears that the government made a conscious decision to exclude dividends. Now, I appreciate it from the perspective of an owner-manager. You could have paid yourself in salary or dividends, but I think the government, in a sense, uses salaries or payroll as a proxy for the size of the organizations. And if you cut through a lot of the stuff already, where part of the rationale for a lot of these programs is to try and preserve jobs and so on, right? So I think that's why the government is sort of more focused on payroll and stuff. So you never know, right? But I'm not really expecting them to change the qualification requirements.
That's excellent. Thanks so much, Lawrence. We have finished all of the questions, and I am going to turn the screen back over to Corinne to close us out.
Thank you.
Thank you very much, Hilary. Thank you very much, Lawrence, again, for speaking to us today. I learned quite a lot of new information. I think one big lesson learned is not to rush in with any of these applications. It was, I personally didn't know, because I haven't been following it so closely, that you can apply until September 30th. So it's better to take, good care in when you're applying. So thank you for that. I wanted to briefly also mention that we are going to continue with all of our webinars series. So there are a few here on your screen. On April 30th with ISA Town Hall, which is tomorrow. May 4th, we're talking about protecting essential workers from COVID-19, and this is going to be presented by Hasco. And we are going to have a YPN webinar on May 22nd, and it's going to be presented by Lee Murphy, and he's going to discuss sales strategy in the sign industry from his perspective. So without further ado, again, thank you very much to everyone who joined in today, and have a fantastic rest of the day and the rest of the week. Bye.